This is Matthew Cratter from Trader University, and today I want to talk about the death of gold, the end of gold as an investment and a store of value. Whenever I talk about this, I always get comments about the 5,000-year history of gold, etc., and how the pharaohs loved it and Cleopatra loved it, and how it's been around for so many thousands of years. And my response always is, well, the horse has been around for 5,000 years, probably a lot more than that, probably more like 20,000 years. And it was not a very good form of transportation. I love horses. I enjoy riding them. I live in Colorado. But that being said, I prefer when I really need to get around by car and airplane. So horses have lost 99.999% of market share in the transportation business simply because superior technology has won out. And this is one problem with gold, is it's simply an inferior form of technology. So people are always asking me, when do I think gold will die? Well, maybe it's already happened. If I told you that we would have all this money printing going on, quantitative easing over the past 10 years, where the Fed prints money, increases the money supply. Since 2009, the money supply has gone from roughly 8 trillion to close to 20 trillion. And in the process, the Fed prints all this money. They use it to buy treasuries and monetize the federal government's deficit spending. We can see here that since the great financial crisis, really since early 2009, the Fed's balance sheet has gone from about 2 trillion to closer to 7.6 trillion. Now, in the meantime, what has gold done? Gold has been extremely weak, and it looks like it's breaking down again. One of the great things about this meme, Peter Schiff making fun of Bitcoin, is that gold in this meme is always at 1,700, and perhaps by coincidence today, it's also right around 1,700. And if we look where gold's trading, we're almost back to where it was in March of 2020, when the Fed really embarked on this new round of quantitative easing. Everyone who talks to gold bugs and looks at gold models knows that gold should actually be trading much higher. It should be trading closer to 4,000, 5,000, 10,000, depending which model you're using, but it's not. And so the two real theories are, maybe it's being suppressed by central banks. This has almost certainly been happening. Central banks since 1971, since the U.S. left the gold standard, have been trying to suppress the price of gold, and have been doing it fairly successfully by creating a lot of paper gold and using this excess supply to hold down the price. I think that another huge driver, which gold bugs don't talk about at all, is that gold is losing its store of value market share to things like stocks and Bitcoin. And we'll look at some charts about that. But either way, we can say pretty definitively that gold has been a terrible way to protect yourself from central bankers, from money printers, and from all these things that the kind of people who hold gold are usually very worried about, I would say rightfully so. Here's a chart of gold's performance. Gold is down here. It's the yellow line. Gold, I'm doing this since the beginning of 2009, January 2009, when the Fed really began printing and the era of quantitative easing in the U.S. was born. Gold is up approximately 84%, S&P 500 up 375%, and the NASDAQ up 994%. Gold going up, not even doubling, as the money supply has gone up so much, and the Fed's balance sheet has gone up, call it fourfold, and gold has only gone up, hasn't even doubled, shows that there's something wrong. If I told you this was going to be a decade of quantitative easing, you would have expected gold to be much, much higher, and it's not, for good reason, as we're going to talk about. Before we do that, though, I would just ask you, if you're enjoying this video, to please be sure to hit that subscribe and like button. If we take a look at the chart of gold versus Bitcoin, in this chart, if the price goes this way, goes up, it's gold strengthening. If it goes down, it's gold weakening, and Bitcoin outperforming. What we see is that on almost every time frame, Bitcoin has just been killing gold, and it becomes almost ludicrous if we scroll out from here and see what gold has done in Bitcoin terms. It's completely collapsed, and in the process, Bitcoin has gone from being worth zero to being worth $1 trillion. It's now worth 1/10 of the market cap of gold. Gold is a market cap of roughly 10 trillion. No one really knows how much gold there is in the world, and so this makes it more difficult. This is one of the problems with gold. But either way, the market cap of gold is roughly, call it 10, 11, 12 trillion. And Bitcoin has been rapidly taking market share, as we can see from this really brutal chart. If you're long gold and you are don't own any Bitcoin, or you're short Bitcoin, you're basically betting on this trend reversing. It's extremely unlikely that this will ever reverse. You can see over almost every time frame, this has been a really bad trade to be long this chart. You should be short the chart. You should dump all your gold and buy Bitcoin instead. Now, why is this? Gold is, as we've been saying, an outdated money technology. It's historically was a very nice way to store value. One gold coin, 1 ounce of gold, used to buy you a horse or a fine men's suit, and it still does today. So it has function as the store of value. But the real problem is that it's very difficult to move around. It's very expensive. It's very heavy. It's difficult to verify or assay. And this is one of the reasons that the whole paper money system, the fiat money system, developed over the past 150 years, was because gold is very difficult to move around. So it's much better. It's much more efficient to store it at a centralized location and then issue pieces of paper that are backed by the gold. And this is what banks have been doing and central banks have been doing. And then finally in 1971, gold and the US dollar really decoupled. So ironically, gold is one of the reasons that we're in this fiat mess, simply because it's so difficult to move around. If I want to move $100 million of gold from, let's say, New York City to London, and this is not a lot of money in terms of financial institutions or corporations, etc. If I want to move this much in terms of a store of value from New York City, from Wall Street to London, how long will that take? How much will it cost? Well, it took Germany 4 years, call it 4.5 years, to move their gold back from Paris and New York. $31 billion worth of gold. It costs many millions of dollars to do this. With Bitcoin, you could move $100 million worth of Bitcoin in less than an hour, probably in less than 30 minutes, and you'd only pay something like $10, $12, $15 in fees. And so Bitcoin has this real advantage that it's very scarce in the way that gold is. In fact, it's much more precisely scarce. There are only 21 million Bitcoin, whereas gold, there's quite a bit under the ocean, and there's a huge amount in the solar system. By contrast, Bitcoin is algorithmically scarce. It's software as a store of value. The other real big problem with gold, it's very difficult to verify. You can imagine trying to go through and make sure that $31 billion worth of gold bars were all real gold. There have been a lot of problems really since the beginning of time with people doing fake gold bars where the inside will be some other form of metal, some sort of usually copper alloy, and then it's coated in gold. This is very different from Bitcoin. Bitcoin, you can verify. If you run a full node, you can verify that your Bitcoin is real. So this is why I say that gold is an outdated money technology. It's very slow to move around, and in the digital world, we can't wait years or months or weeks to move value around the globe. We should be able to beam it around if we're going to be a modern technological society. Then I'll always hear the next response from goldbugs will be, but gold has so many real world uses and Bitcoin doesn't have any real world uses. Obviously, these people don't understand Bitcoin. Being able to send money in a non-permissionless, uncensorable way around the world is a huge value. That being said, what a lot of people don't realize, especially goldbugs don't realize, is that gold trades mostly as a monetary good. You can attribute roughly 90% of its value to it being treated as money. It trades at a monetary premium. This is why it's very different the precious metals like silver and gold are very different from normal industrial metals like copper and aluminum, which just trade more based on supply and demand cycles. And so gold still has a large industrial usage. Obviously, it's in all of our iPhones, for example. But if gold were to be demonetized, if it were to lose this special luster or sheen that it has as a monetary good, the price theoretically should collapse something like 90%, and it would begin to trade like an industrial metal. One problem for gold is that the longer that its price stays, let's call it unnaturally low because it's being manipulated by central banks, the longer it stays low, the more it will be adopted in uses, in tech usages, in electronics, etc. And when this happens, this really accelerates the transition of gold from a precious metal to an industrial metal. And gold hodlers give way to industrial users where gold is being bought and sold based on industrial demand. And what this does is it really destroys gold's high stock to flow. The stock is just the inventories that are sitting there. The flow is the production of new gold from mines. And this is one reason gold has traded at a very high value, because it has a high stock to flow. Bitcoin currently has a similar stock to flow as gold, and is on its way to having an even higher stock to flow, while gold's stock to flow is going down as it transitions to more of an industrial metal. You can do a thought experiment that demonstrates this quite clearly. If gold were trading at 10,000, 5,000, or 10,000, wherever the models say it should be trading, it would be used much more sparingly in industry. And the cheaper it becomes and the longer it goes as a poor store of value, the more that accelerates this transition into an industrial good. Now, another problem I have with gold, and it's ironic because gold is often talked about as the money of the common man, etc., by gold bugs, but I would actually argue that gold is very elitist. Gold is for large institutional investors. It's for countries. It's for really rich people, simply because unless you're buying millions or tens of millions of dollars worth of gold, you end up paying very, very high fees and a huge premium to the price of gold unless you're buying in bulk. And so it's unfair to expect, especially people in developing countries, to pay a huge premium and a huge fee to hold gold. And then the real problem is obviously in places that have security concerns or crime, where do you actually store gold? It's fairly dangerous to store. If you store it at your house or if you store it on your person, you risk turning yourself into an attack. An attack. So this is one place where Bitcoin has a real advantage too, that it can be used anyone with a smartphone. And at some point, the whole world's population, or most of it, will really have smartphones. You can hold Bitcoin on a password-protected smartphone. If the smartphone is stolen, you can still have access to your Bitcoin through a recovery seed or something like that. Here's just a simple Google. The reasonable markup for gold is 5 to 8% to get in, and then of course 5 to 8% to get out. So you're talking anywhere from 10 to 16%. And when you're dealing with an asset that just kind of sits there around 1,700, this makes it a really this sort of adds injury to insult, the fact that it's so expensive to transact in it. You don't want to buy paper gold. You don't want to buy a gold ETF because you don't know whether it's really backed by gold, etc. You want to buy the real thing, but the problem is real physical gold, gold coins, gold bullion trades with these terrible, inefficient markups. By contrast, you have something like Strike, which is the company Jack Mallers started, and they're now able to send money anywhere in the world using the Lightning Network, using Bitcoin's Lightning Network. This is really what the future looks like. The future is not people mailing gold coins, sending them all around the world. The future is obviously digital, and it's digital money. It's interesting when I used the start of January 2009 as starting point for this chart of the huge underperformance of gold versus stocks and Bitcoin, which have begun to replace gold as a store of value. This was done somewhat intentionally because that's when the quantitative easing started. It's also when Satoshi launched Bitcoin. And it's quite amazing, as I said, that Bitcoin now has a market cap in excess of 1 trillion, and it's basically about a tenth of the size of gold. And so this meme, I never get tired of showing this meme, and I'm sure Peter Schiff will still be bad-mouthing Bitcoin when it hits 1 million. But I think we'll be very lucky if gold is still at 1700 at that point. I think at that point it's down 50 to 90%. Instead, if you just look at the demographic flows, Gen Z and Gen Y millennials have no interest in gold. Obviously, everyone likes some pretty jewelry, but as an investment, it's not even on the radar. And this has been a pattern. Gen X was much less interested in gold than the baby boomer generation, and millennials and Zoomers, Gen Z, are much less interested in gold than Gen X or the boomers were. So these demographic flows are going to continue to hurt gold for many, many years to come. And I imagine that millennials and Zoomers who inherit gold from their parents or grandparents will have very little interest in holding it. They'll sell it for stocks or sell it for cryptocurrencies, probably sell it for Bitcoin. And that's one reason that this gold to Bitcoin chart, looks the way that it does. This makes sense because these are the generations, especially when I look at my youngest child, that this generation really understands digital currency. They use it in all their games when they're playing Roblox. They use Robux, etc. They may like the way that gold looks. These things may be represented as gold coins, but they're not real gold. They're obviously digital currencies, and Bitcoin is the real digital currency that is scarce, unlike all the other cryptocurrencies. And so I would suggest that selling your gold and buying Bitcoin today, it's like selling your Borders stock or Barnes & Noble stock. It's like selling your physical bookstore or your newspaper company and buying Netflix or Google or Amazon instead. This is really the trade. And people who resist it, like Peter Schiff, they just end up looking like fools for year after year after year. So I'd suggest that gold, its death is already upon us, and we can see it in the price chart. We can see it in the way that it has handled all of this quantitative easing for the past year, especially. If you found this video helpful, please hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.